In bookkeeping, source documents are the original records that prove a transaction happened. They are the foundation for accurate journals, ledgers, and financial statements. If a number appears in your books, you should be able to trace it back to a source document. Start with sales documents. A sales invoice shows what you sold, the date, quantities, prices, taxes, and the customer's details. For retail, a cash register receipt or point-of-sale receipt serves the same purpose. For money received, keep a receipt issued to the customer and match it to a bank deposit slip or deposit record. Next are purchase documents. A supplier invoice confirms what your business bought and what you owe. A purchase order shows what you requested from a vendor, and a delivery note or packing slip proves what was actually received. Together, these support accounts payable and inventory entries. Banking documents are critical. Bank statements, canceled checks, and electronic payment confirmations verify cash activity. For card payments, keep merchant settlement reports so you can reconcile fees and deposits. Payroll creates its own trail. Timesheets, pay stubs, payroll registers, and tax forms support wage expense and payroll liabilities. Other common source documents include credit notes for returns, debit notes for adjustments, loan agreements for financing, and contracts for long-term commitments. Best practice is simple. Capture every source document, label it, and file it consistently, digitally or on paper. Then, when you reconcile accounts or face an audit, your records tell a clear, verifiable story.